Silver and gold both climbed higher in Tuesday's London session, pushing past the $39 and $3,400 marks respectively. This upward move came as global stock markets took a hit, and the U.S. dollar slipped, once again shaken by mounting political pressure on Federal Reserve Chairman Jerome Powell to either resign or be removed from his position. On XCOM, formerly Twitter, William Poult, who heads the Federal Housing Office, stirred attention by declaring that Powell's resignation speech is coming soon. Polte also reshared a message from former President Donald Trump, applauding Powell for an outstanding job in what appeared to be praise for taking a stand against the radical left weaklings. Meanwhile, over on Fox News, U.S. Treasury Secretary Scott Bessent took a more neutral stance, saying, "If Powell wants to finish out his term, he should. But if he's thinking of stepping down early, then he should go ahead." That sentiment was echoed more firmly by Mohamed El-Erian, a widely respected economist and advisor to the insurance giant Allianz. El-Erian stated that if Powell's true goal is to protect the independence of the Federal Reserve, which he personally believes is absolutely crucial, then stepping aside might be the best path forward. The dollar's decline, falling back to a level it hadn't seen since a 3-year low last month on the DXY currency index, helped fuel precious metals. Silver touched a fresh 14-year high at $39.21 per ounce, while gold edged within $75 of its mid-April record, just shy of the $3,500 mark. Trump's open threat to remove Fed Chair Powell has sent shockwaves through global markets, reported a note from the World Gold Council, an organization backed by the mining industry. The reasoning is straightforward. If Trump does go through with it, his replacement might be someone more aggressive about slashing interest rates. At the same time, concerns about America's ballooning national debt continue to strengthen gold's appeal, according to Suki Cooper, a precious metals analyst at Standard Chartered Bank. With fresh developments on tariffs expected soon, gold will likely stay in the spotlight, Cooper added. Right now, its support level looks solid. Industrial metals weren't left out of the action either. Platinum and palladium also posted gains on Tuesday, though they remained about $30 and $60 below last Friday's highs in the spot market, peaking at $1,484 for platinum and $1,336 for palladium per troy ounce. That modest pullback in platinum group metals, or PGMs, came as borrowing costs for these metals, known as lease rates, eased from their recent highs. In other words, while demand remained strong, some of the extreme tightness seen in recent weeks began to loosen up, providing a bit of breathing room for market participants. Gold had a particularly notable day, recording only the third ever London 3 p.m. benchmark price above the $3,400 threshold. It cleared around $3,407 during the city's daily auction, a significant milestone by any measure. Silver, by comparison, traded around $38.80 per ounce at its midday benchmark auction. It hadn't settled above $39 since way back in September of 2011. Still, it came remarkably close just last Monday, finishing within half a cent of that mark. The last time silver was this elevated, as remarked Jonathan Butler, head of precious metals business development and strategy at Mitsubishi, we were seeing the metal on its way down from an all-time high near $50. That period was marked by the Eurozone debt crisis, political fights over the U.S. debt ceiling, and the unprecedented downgrade of America's sovereign credit rating. Butler emphasized that the story is very different today. This time, silver isn't just being driven by its traditional role as a safe haven asset, he explained. It's also gaining traction as a growth-focused industrial metal. Its future looks bright, especially as demand surges in the fields of artificial intelligence and clean energy production. So what we're seeing is a convergence of political uncertainty, monetary policy tension, and evolving industrial dynamics, all combining to lift silver and gold prices in a powerful way. And while it might be tempting to chalk this up to simple market noise, the broader implications are worth watching closely. With the Federal Reserve's leadership under intense scrutiny and inflationary concerns still lurking beneath the surface, investors are increasingly turning to metals that have stood the test of time. We're not just talking about hedge fund managers or seasoned portfolio strategists. Everyday savers, retail traders, and even institutional buyers are shifting their focus toward assets like gold and silver, drawn by their dual appeal as both protective stores of value and promising industrial resources. As the global financial system continues to respond to shifting power dynamics and rising fiscal pressures, the roles of silver and gold are being redefined in real time. Whether Powell resigns or stays, and whether Trump gets a second term or not, one thing's clear. Metals are back in the spotlight, and they're likely to stay there for the foreseeable future. Don't forget to like this video and subscribe to our channel if you found this breakdown helpful. We'll be covering these trends in real time and helping you navigate the markets with clarity and purpose. In many ways, what's happening in the markets right now isn't just a knee-jerk reaction to political theater. It's a reflection of deeper structural worries. Investors are watching closely, not just because of who might be running the Federal Reserve next, but because of how monetary policy will adapt in a world that's rapidly changing. Let's talk about the dollar for a moment. Its recent slide on the DXY index has triggered a broader shift in asset allocation strategies. When the dollar weakens, commodities priced in dollars, like gold and silver, tend to become more attractive to international buyers. That's part of the reason we're seeing these aggressive moves upward in metals pricing. But this time, it's not just about currency fluctuations. It's about credibility, confidence, and continuity at the highest levels of financial leadership. For Powell, the pressure is mounting from all sides. The Trump faction wants him out, either to install someone more dovish or to shake up the institution. Meanwhile, traditionalists like Elarian warn that the central bank's very independence might be on the line. If Powell steps down voluntarily, it may signal weakness, but if he stays and faces political dismissal, the consequences for the Fed's image could be even more severe. These aren't just philosophical questions. They have tangible effects on everything from interest rates to inflation expectations, and by extension, on hard assets like gold and silver. And gold's rise above $3,400 at London's auction isn't just a number, it's a message. It tells us that institutional investors see risk, not just in stocks or in the dollar, but in the broader structure of economic leadership. Remember, this is only the third time ever that London's gold benchmark has closed above that price level. That puts this moment into historical context. It's not just noise, it's potentially a turning point. Silver, too, is flashing signals that we shouldn't ignore. The last time silver was in this territory was over a decade ago during a global debt panic. But unlike then, today's rally isn't happening in a vacuum. It's fueled by a dual narrative. Silver as both a safe haven and a high-tech commodity. In clean energy, silver is a crucial component in solar panels and battery technologies. In AI and next-gen computing, it plays an important role in conductive applications. So as these sectors expand, demand for silver is getting a structural boost that many analysts believe will outlast any short-term trading cycles. Jonathan Butler from Mitsubishi made that clear. Unlike in 2011, when silver's spike came amid panic, today's surge is underpinned by forward-looking fundamentals. In other words, this isn't just silver being dragged higher by gold, it's silver pulling its own weight. Meanwhile, industrial metals like platinum and palladium are also seeing renewed interest. Though still slightly below last Friday's peaks, both metals have stabilized at strong levels, signaling healthy demand across sectors like automotive, electronics, and even hydrogen fuel development. And there's something else to consider. Lease rates for platinum group metals, which had been climbing to record highs, are now easing. That tells us that tightness in supply chains may be relaxing slightly, which could enable more fluid trading and broader participation in these markets. From a macroeconomic perspective, the convergence of falling dollar strength, central bank uncertainty, and global geopolitical friction is creating a perfect storm for metals. And if Powell were to actually step down or be removed, the psychological impact could be even more dramatic. In that scenario, the Fed would be seen as vulnerable to political interference, That would likely send bond yields and inflation expectations all over the place, while simultaneously boosting the perceived safety of non-yielding assets like gold and silver. Now, let's not forget the broader context, the global debt situation. Suki Cooper from Standard Chartered nailed it. America's rising debt burden is pushing more investors toward precious metals as a long-term hedge. This isn't a passing trend. With debt to GDP ratios expanding and government spending unlikely to shrink anytime soon, metals are reasserting their relevance in diversified portfolios. And with further updates expected on trade tariffs, particularly in sectors related to energy and technology, gold and silver may continue to be in the spotlight. Investors are bracing for more supply chain pressures, higher input costs, and possibly slower economic growth, all of which tend to favor defensive assets like gold. What we're seeing is a market that's starting to price in instability, not just in policy, but in leadership. This makes the current gold and silver rally qualitatively different from past spikes that were purely driven by economic cycles or inflation scares. We're in a new paradigm now, one where politics, policy, and industrial innovation are intertwined. And metals are right at the center of that web. Of course, these dynamics don't play out in a straight line. There will be pullbacks, volatility will remain high. But for long-term investors who understand the broader picture, these moments offer clarity. Clarity about where global confidence is shifting. Clarity about which assets are gaining relevance, and clarity about how markets respond when leadership itself becomes part of the risk equation. Whether you're a trader looking for entry points or a long-term saver building generational wealth, this is a time to pay attention. So what happens next? Will Powell hang on to his seat? Will Trump push harder for a replacement? Will gold break through that $3,500 ceiling? Will silver test 50 again? No one can predict with certainty. But one thing's for sure, we're entering a chapter in market history that will be studied for years. If you've been watching the headlines and wondering whether the hype around gold and silver is justified, well, you're not alone. But beneath the headlines, the fundamentals are telling a much deeper, much more strategic story. So stay informed, stay prepared, and stay focused on the long game. Let's take a step back and look at the big picture. We're seeing silver and gold gain ground not because of one isolated event, but because of a combination of factors all hitting at once. Monetary uncertainty, political drama, rising national debt, and the ever-growing relevance of metals in the technology and energy transitions. When precious metals start moving like this, it's usually a signal that investors are recalibrating. They're reassessing their expectations, not just for the next quarter, but for the years ahead. It's not a fear-driven scramble. It's strategic repositioning. And when central banks, institutional investors, and even retail buyers all shift in the same direction, it becomes a movement you can't ignore. Let's return to the numbers for a moment. Gold's London benchmark closing above $3,400 for only the third time in history is more than symbolic. It's a statement. Markets are sending a message loud and clear. They no longer have full confidence in the old anchors, whether that's political leadership, fiat currency stability, or long-term bond yields. Silver's climb toward $40, reaching a 14-year high, echoes that same message. And it's not just riding gold's coattails. As Jonathan Butler of Mitsubishi pointed out, silver's industrial demand is expanding. This metal isn't just a financial hedge anymore. It's a technology metal, an energy metal, a future-facing metal. That's why silver's current behavior is so notable. The last time it came close to these levels, back in 2011, it was during a period of global debt turmoil and U.S. political deadlock. Back then, silver hit an all-time high near $50. But the rally was largely speculative, fueled by fear and reactive trading. Now, the foundation feels more solid. There's real demand, there's real use, and there's real conviction behind the move. And this brings us to an important realization. We're watching a transformation in how investors think about metals. Gold is no longer just about inflation. Silver isn't just about volatility. Platinum and palladium aren't just about catalytic converters anymore. The narrative has matured, and it now spans everything from geopolitical risk to climate change to AI infrastructure. Even the easing of lease rates in the PGM sector, which we mentioned earlier, is significant. It suggests that while supply remains tight, the pressure is no longer suffocating. That allows more market participants to enter, creating deeper liquidity and more sustainable price action. These are the kind of subtle shifts that shape long-term trends. When borrowing costs come down, when supply chains start to ease, when industrial demand keeps growing, that's when you know this isn't just a spike, it's a structural evolution. And let's not forget the human factor here. Markets are made up of people, analysts, traders, economists, investors, who all respond to cues, confidence, and credibility. The uncertainty around Jerome Powell's future isn't just a headline. It's a symbol of how fragile institutional trust can be in a polarized environment. Trump's suggestion that Powell should be replaced isn't just politics. It's a direct shot at the foundation of monetary policy as we know it. And that's why gold and silver are reacting so strongly. Not because Powell might leave, but because the rules of the game are shifting beneath our feet. In a world where policy decisions can swing based on social media posts, where debt ceilings are constantly weaponized, and where global alliances are in flux, investors naturally seek clarity. And historically, clarity often takes the form of a bar of gold, a coin of silver, or a diversified metals portfolio. And here's where you, the viewer, come in. Whether you're new to investing or you've been watching these markets for years, the signals right now are hard to ignore. You don't need to predict the exact top or bottom, but you do need to recognize when the environment is changing and position yourself accordingly. Maybe that means adding some physical silver to your portfolio. Maybe it means looking at gold-backed ETFs. Maybe it means exploring industrial metals for the first time. Whatever your strategy, the key is to act based on conviction, not emotion. Use data. Watch trends. Follow the global signals, not just the headlines, but the underlying forces that are shaping our financial future. Because this moment in the metals market isn't just about the price of gold, it's about what gold represents. Stability, resilience, value that transcends currencies and crises. And silver? Silver is the bridge, the asset that straddles both tradition and innovation. It's the hedge and the opportunity, the past and the future compressed into one precious element. So as we move forward, keep asking the right questions. Who's steering our monetary policy? What risks are hiding in plain sight? Where are investors putting their trust? And how can you position yourself, not just for survival, but for growth? Because the next few months, and certainly the next few years, are going to be shaped by how the world responds to uncertainty. Some will freeze, others will adapt, and a few, those who understand the signals, will thrive. If you want to be one of those few, stay curious, keep learning, watch the metals, and most importantly, don't lose sight of the long-term view. Gold and silver aren't just numbers on a screen. They're reflections of our collective belief in value, stability, and the ability to weather storms. In times like these, that's more important than ever. Thank you for watching. If this video helped you see the markets in a new light, please give it a thumbs up and subscribe to our channel. We're committed to bringing you deeper insights, timely analysis, and real-world context so you can navigate these turbulent times with confidence. Stay safe, stay sharp, and stay invested in what truly matters.